separate conversation now. Smartworks Coworking Spaces, that is the stock on our radar. Neetish Sarda, who's the managing director and founder of the company, is joining us now to discuss a few points. The first, of course, is the revenue potential from the new commercial park, leasing targets for FY26 and the pricing trends as well. These are some of the points we'll be discussing apart from their expansion plans as well. Neetish, good afternoon. Thank you so much for joining in. You know, you've spoken about expanding more in the Mumbai market, reaching that 1 million square feet in terms of leased portfolio. But about the campus that is developed in partnership with Tata Realty, how does this partnership work? They have built the campus, now what? Like, you will be renting it out? Is there any potential revenue share that will happen here? Can you explain the contours of this particular partnership?
Absolutely. First of all, thank you so much for having me on the show. I think the size that Smartworks has currently present in Mumbai, we were closer to about 500,000 square foot before we took up this property. This property now increases our footprint by over 125% in Mumbai, taking our footprint to over 1 million square foot. This is the largest campus in the city with over 12,000 seats that will be there in the center. The deal with Tata Realty is in a strategic location of, the Thane Belapur Road. We've gone ahead and taken the entire 557,000 square foot building in their Intellion campus. We've leased the entire building on a long-term lease. And there is no revenue share model, but with looking at Smartworks' current presence, our existing centers, which are already operational, are above 95% occupancy in the city. And we're seeing a significant amount of traction. So being the financial capital of the world, we're happy to announce that of India, we're happy to announce that, we've increased our footprint to over 1 million square foot here in the strategic market.
Understood that. So give us a sense of how exactly this works for you. Do you already have tenants for this particular campus? And typically give us a sense of the sectors that these tenants belong to.
So we have a lot of indication from a lot of our large enterprise clients who want to expand into this location. Almost 35% of our existing revenue comes from our existing customers growing with us. So there is definitely a lot of traction for this location. Most of this traction is coming from large enterprise ITES clients. Our focus is always on, mid to large enterprise clients who are taking 300 plus seats. So most of the demand for this building is also coming from such clients. But ITES and GCCs are the major focus with the kind of traction that we've gotten so far.
Got it. Neetish, IT is one space which has been seeing some headwinds right now. Do you think the demand will not be as strong as what you have seen in other centers of the company? Also, how long does it take for a new center to achieve that break-even level? How many new centers are still to achieve that level for you?
So this is the new center in Bombay. We have signed almost more than 1.5 million square foot, spread across in this financial year so far. I think it takes us about 4 months to build out a center to get to operational. From there, it takes us about anywhere between 10 to 12 months to get it to a break-even stage. Initially, that is the time that it takes. But just because of our focus on large campuses and our focus on mid to large enterprise clients who are more sticky in nature and who come and take up much larger spaces, that's why once it gets to that 60-65% occupancy in the first 10 to 12 months.
Hi, Neetish. I think we have a bit of a glitch as far as that connect. Yeah, please continue, Neetish.
Sure. So with the new centers that we've already signed up, we're seeing a significant amount of traction increasing in all these centers. While it takes you 3-4 months to build it out initially, but the ramp up visibility is very, very good.
So you're saying the payback period for any new center is around 12 to 18 months. Did I read that correctly?
12 to 18 months after it has gotten occupied. So typical payback period from the time that we invest is within 3 years, we get our entire investment back.
Got it.
Okay. Neetish, give us a sense of how the balance sheet is looking. Also give us a sense of cash flows. How is that looking? What is the total debt on books, current financing cost, post-rate cuts? What kind of interest cost savings can you see?
Smartworks has been going strong quarter on quarter. If you look at our numbers, last year we closed at 1,375 crores in revenue. The first quarter of this year, we had a 21% jump with closing the quarter at 379 crores in revenue. But that also with a significantly reduced loss. Our losses last year were closer to about 56 crores in the first quarter. It's come down to only 4 crores. So there is a constant progress, despite the high growth base that we are in, towards getting towards that profitability. If you look at our EBITDA margins, that has also been steadily growing. You'll see our EBITDA margins have grown from 58 crores to the 90 crore number that is there. And if you look at our OCF, which is the true cash flow that the business is generating, Smartworks has been constantly demonstrating that our cash flows are very, very strong. Just in the first quarter of this year, we generated a free cash flow of over 70 crores. So that cash flow coming in is helping us expand the business. If you look at the debt in the books currently, we're a net debt negative company now. We have enough cash flows in the company, and the debt amount is significantly lower than the cash flows which are available, or the cash which is available with the company. Some high cost debt we had returned with the IPO proceeds that we had raised, back in July. But I think our debt positions are lower than our net debt negative right now.
Got it. So net debt negative, that is an important update that's come by for Smartworks. Neetish, we had spoken earlier and you spoke about expanding internationally as well. There's a Singapore center, and now that you have free cash flows, you are in that expansion mode already. Tell us, how does it differ in Singapore versus India in terms of pricing, in terms of the capex that you have to make? Do you have any further plans to expand internationally? What kind of seat addition are you looking at?
But if you look at India as a market, it's such a huge market with so much potential. As I said earlier, we've already signed over 1 million square foot, 1.5 million square foot just in the first half of this year. We're seeing so much demand coming from India that our focus is always going to be in India with the size and the kind of centers that we are taking up. Singapore was more of a strategic expansion. We realized that a lot of international clients coming to India have their decision-making or regional headquarters based out of Singapore. So having a presence there gives you the ability to be closer to the decision maker. I think strategically we would want to keep growing in India because we're still, just a very small player in a very big potential market. The market is over 1 billion square foot. Smartworks' portfolio is closer to about 12 million at this point of time. So I think there is vast potential in India itself, and our majority of our expansion and our focus is on the Indian market. But we will be opportunistic about the different markets depending on how well Singapore has done for us. We are still evaluating that. It's only been a year, but both our centers in Singapore are above 95% occupancy, and we're seeing a lot of traction coming from that market as well.
Okay, thank you so much, Neetish, for joining us, giving us a sense of this particular development as well as the way forward. We'll now slip into a short break. On the other side, Rajesh Palvia from Axis Securities will join us to give us a quick technical check on the market as well as its top trading picks.